Hi, this is James from McKayResearch. For this week's video, I've shared with you part one of my appearance on the Genesis Block Education podcast with Malcolm Atuona. Now, Genesis Block Education are a rapidly growing educational platform that seek to connect a global network of professionals, blockchain developers, and crypto experts to solve some of the world's pressing social and economic problems through the technology. I'll leave their information in the description below. I really enjoyed this conversation with Malcolm, and although the original title of the podcast was Is Blockchain Hype?, we actually cover a far-reaching number of topics, from the ongoing gold versus Bitcoin debate. We talk about the implications behind some of the recent regulatory announcements, and we delve into the implications of the increasing cryptofication of businesses, that is, businesses acquiring large quantities of Bitcoin, and much, much more. Now, this podcast was originally recorded back in December 2020, so of course it's interesting to see how things have turned out relative to what we discussed back then. So I hope you enjoyed this part one of my appearance on the GBE podcast. Part two will be uploaded next week, and enjoy.
From Peckham, South East London, this is the Genesis Block Education Podcast, and I am Bitcoin by Malks. So in today's session, myself and James, we basically power through blockchain as a technology. We touch upon what are the key principles of blockchain, what is the real value behind blockchain. We also talk about the adoption of blockchain technology, where blockchain has pretty much been corrupted by industries now, I would say. And with Bitcoin being the only tangible evidence of a killer app on blockchain. Could there be more down the line? Potentially. So my guest today is James McKay. I've mentioned his name enough. James McKay of McKayResearch. James is a market consultant who focuses on sort of global trend analysis, especially in tech investments. He works with a variation of customers such as investment firms, legal consultancies, and consortiums. James really takes you on a journey here in terms of what's happening from a corporate perspective, from wealth management, regulatory challenges, regulatory overview, and then back to giving a view of real life solutions which are being developed on blockchain. So guys, this is going to be a really interesting conversation. It's information packed, and James is a charming and intelligent guy, so you're really going to appreciate his knowledge and insight. So guys, enjoy the podcast. I'll see you on the other side, and it's over to you, James. So today we're here to answer the question, is blockchain hype? And obviously I have yourself, Mr. James McKay, on behalf of McKayResearch. So James, tell us about McKayResearch, and tell us about yourself, of course.
Basically, I'm an independent research consultant, and my expertise is really global trend analysis and end-to-end custom research solutions. And I've really spent a significant time, over 12 years now, performing in-depth qualitative and quantitative studies for some of the world's largest privately held research companies. And that's really been across several industries as well, including fast-moving consumer goods, consumer finance, pharmaceuticals. And I've also spent some time as a portfolio analyst here in London.
Okay.
So I've been quite fortunate in that I've had the opportunity to have performed like a lot of deep dive analysis for all these industries. And a large part of that, of course, was doing a lot of in-depth interviews with industry experts, chief executives, etc.
Mm-hmm.
And I sort of quickly learned through that I sort of started seeing patterns in the data and trends both within and between different markets. And I developed my own sort of 360 methodology around that.
Oh, nice.
Which I obviously took very seriously, as my clients would be paying for me not to miss things. And so from that, really, I learned that there was a demand for consultants who can, not only run the numbers in new and interesting ways, but can also give, perspectives informed by a plurality of market experience, as opposed to, single domain thinking. And that's kind of the issue now with the increase in data and big data.
Yeah,
a lot of the specialisms are becoming very data heavy, and indeed, a lot of people are having increasing issues stepping outside of that. So there is a demand for people who can actually see and connect things in different ways. So that was really the driving force behind setting up McKayResearch, where I now bring this sort of unsiloed view, I like to call it,
nice.
to my portfolio of clients that include investment firms, market intel firms, legal consultancies. And so, but the focus is very much on tech and investment for me.
Okay. So what's attracted you to, I guess, the blockchain space?
Well, that's the million-dollar question, really. From my vantage point, as somebody who's looked at trends, social trends, political, economic trends, as well as obviously the multiple consumer markets and investment markets that I've tracked over the years, I kind of, without getting too philosophical, I sort of see Bitcoin as a potential once-in-a-lifetime intersection or like interlocking of multiple trends all at the same time of in technology, in finance, in politics. And yes, it does have some real potential to correct some of the structural issues and imbalances that we're seeing play out in front of our eyes pretty much every day now. And I first really got heard of the space through my coverage and my studying of capital markets, like the gold market and the bond market.
All right.
Typically, my background in financial markets really was very gold heavy, because I realized from quite early on that if you understand how gold works, it forces you to understand how everything around it works, including the stock market, the debt market or the bond market, monetary systems, monetary policy, and so on and so forth. So I really first became familiarized with Bitcoin through studying gold, and of course having listened to a lot of the gold guys over the years and knowing what their positions are. Not that I agree with all of them, far from it. I became aware of this thing called Bitcoin that in the early days was really seen as just maybe something that I don't think many people took it seriously. They thought it was just a form of internet money that a bunch of like IT,
geeks,
bedroom bound, sort of geeks were interested in, like trading amongst themselves.
Yeah.
It soon became that, actually this thing wasn't going to go away, and, there was a reason for it. And from there, I started to investigate the technology a little bit more closely. And it did very much tally with a lot of my understanding from my analysis of the global financial crisis in 2007, 2008, and why the people who were touting Bitcoin actually might be onto something. And so really, all my involvement in the industry really stemmed from that vantage point, really one that was very much sort of a macroeconomic and even political platform. And and here we are today. Of course, it's worlds apart from when I first started following it.
Oh yeah,
but,
exactly.
It's very applicable to almost every area that I've covered in the past. So it's very, very exciting space.
100%. So we'll talk about the cross section between Bitcoin and gold in a second, but I just want to kind of go to the basics of blockchain. So what is blockchain? I know this is such a vast question. So if you can narrow it down in the best way that you can. In your view, what is blockchain? How do you see it from a layman's perspective?
Well, what I would say is that the more you know about this industry and the technology, the more you realize you don't know.
Yeah.
And I did. And as soon as you think you've kind of nailed it, it's like I've understood the general concepts. Then you realize, oh my gosh, there's a whole nother layer of complexity. Layers of protocols or whatever else that you haven't quite got to grips with and haven't grasped yet. So, but the way I like to break it down, as you asked the question, what is blockchain, is that I definitely do see them as distinct. Bitcoin is not blockchain, and blockchain is by no means Bitcoin.
Okay.
And for me, the easiest way to think about it is that blockchain is just simply one aspect of one of the core technologies that powers Bitcoin, or Bitcoin is underpinned by.
Okay.
And so that's the first thing. The second thing I would say is that where I draw a distinction in my mind between Bitcoin and blockchain is that I think that Bitcoin, especially now in the current climate we're in now, it's getting a lot of press and attention from financial markets. I mean, not quite as much as it did a few years back, but it's going to be increasing. The trend is up. I divvy up in my head the interest in the sector between people who are looking at it as a sort of a financial asset akin to gold, and just really see it as a speculation and a way to make as much profit or investment alphas in as short a time as possible. Given that the other financial markets are sort of in a relatively precarious state at the moment, and on the other hand, you've got the people who really understand the technology and are in it for the long haul and really see it as see its value as in its ability to facilitate sort of peer-to-peer exchange of value across a decentralized network of participants. So that's sort of the the original intent and purpose of it. So there's a big difference between those two. I mean, if you could add a third, of course, then you would have to probably add the business community into that, which is some would say co-opted the technology, which I don't quite agree with. But there is obviously huge utility behind blockchain technology for there's increasing numbers of business use cases being developed as we speak. Thankfully, a lot of the hype has died out, which we can talk about a little bit more later.
So,
But I would say, to answer your question, what is blockchain? The first thing I do is I sort of make those distinctions in my head. And that it's really become something that means many things to many people.
I guess sense. It totally depends what lens you're looking at it from. But I think we can lay out what the principles are or the benefits of blockchain. So what would you see as the main benefits and principles within blockchain?
So I mean, to answer your question directly, I mean, for me, blockchain, I think of it as an immutable time-stamped series of data that is distributed across the network and managed by a cluster of computers instead of one central authority. So obviously, all the nodes can verify the transactions, so that you have that ability to distribute trust across the network instead of having one gatekeeper that authorizes all those transactions. And so because all the parties in a network, which is, there can be a group of people, a group of individuals, businesses, it obviously reduces the amount of friction that goes on in transactions because you don't have all the authorization and reconciliation mechanisms.
So the middlemen in between,
Exactly. So that whole disintermediation is one of the core, business use cases for blockchain, but also one of the core use cases is for Bitcoin, because Bitcoin, if we think about what its original purpose was, in many people's eyes, was just a transfer of value or a money transfer problem. So you wanted to have the ability to do transactions without a third party, which obviously is a way to make it more efficient and reduce costs, and you want to be able to do that faster than you did before. And now if you still try and carry out a banking transaction, which I tried to do the other day, stupidly enough. The charges now, I mean, looking at seeing it from sort of the lens of someone who knows about how these other digital currencies work. The banking fees that get slapped onto international transactions are huge, and they also take over half a week to execute.
Up to 3 days in some countries. I totally agree. I see it as the next level or next generation of the internet. So the current, I guess, internet that we currently have is, when you transfer anything on the internet, it's a digital copy, whether it's a PDF, whether it's an email, whether it's a PowerPoint or data, it's a digital copy. Whereas with blockchain, it introduces the ability to transfer digital scarcity. So it could be something such as money, a deed, but you're transferring something which is unique. So I think it has the potential to take the internet to a next level, and in some cases it's referred to as Internet 3.0. But that may be hype rather than reality. So I guess we'll discuss that a little bit further. So
I agree. Yeah.
Just in terms of social impact, what do you see as the key benefits? So I understand it from a technical perspective. What impact can it potentially have on society?
Okay, well, again, there I would probably start out by referencing what I said about the different layers and the different interests, and the different ways you can look at this technology. I think that a great way to look at it is that for the people who say that it doesn't have that much utility in the real world, it's just a digital currency. Its intrinsic value is zero, whatever, so on and so forth. There's another important perspective, I think, that just goes beyond what money managers or hedge fund managers think about whenever Bitcoin will rise to six figures and whatnot. Bitcoin has been directly employed for emergencies by like a lot of people around the world, and I think we would all agree that like if you see large groups of people resorting to something that in an emergency, and that thing that they're resorting to actually works to solve a lot of their problems that they have in the immediate term, that is a pretty good litmus test of its utility and its functionality, basically. And so if you look at places where it's being used in such a way, like in great examples, Venezuela, where people's purchasing power has been decimated to the point of being worthless, and so people are turning to Bitcoin as a means of shoring up whatever purchasing power they might have still, because the government has totally destroyed the currency and introduced capital controls.
Yeah.
So these individuals are basically making raw and direct use of what Bitcoin was really originally conceived for, and so I think that's a really, really important point that people need to really take on board. Those who are still on the fence about whether it has any value or not. To give another example, for example, is that I like to quote as Iran. I just posted about this today on social media.
Yeah.
And how that is, they've just announced, like it's a couple of weeks ago now, but they made another announcement today about how they're already, moving quite heavily into Bitcoin in order to circumnavigate the sanctions, which obviously, for a long time now have cut them out of the SWIFT international banking system, out of necessity, because the real has been basically plummeting, and they've got skyrocketing COVID-19 cases. And there are all sorts of structural imbalances that are happening in the country as a result of not being able to transact. They've basically just said, okay, well, we have to find another way. Yes, we've negotiated trade agreements with European countries like Switzerland, special trading mechanisms that they've used, but it's not enough. And so they've looked to Bitcoin as a potential solution there against centralized control of money flows. So that's another example. Whether you agree with the Iranian regime's intentions or not for what they're transacting in and out of, that's probably a subject for another debate. But I just think that the fact that they're using it exactly, the fact that they're using it and using it successfully has to be it has to be a bit of a it's a bit of a sounding board for the entire region, I think, and it will spark fear in the hearts of those that are attempting to maintain sort of US dollar hegemony. From a pure Bitcoin point of view, there I think we can see that in cases of say institutional government or even individual distress, it already has the track record actually it has proven utility, and it's happening right now. So I think that is one area that's slightly overlooked, as people can often get embroiled in these armchair debates about whether it has value and what its investment delta will be over the next decade and so on and so forth. I think it's important to step out of one's comfort zone and one's bubble and look at where it's being deployed directly to sort of alleviate suffering, basically.
Yeah, no, just to add to what you said, I mean, in 2020 alone, we've seen it used on the front line of the NSAS protest in Nigeria. We've seen it used in Argentina, where Argentina has, capital has been constantly frozen over years as part of the Corralita. We've seen it in Belarus, which is currently going through its own turmoil. We're seeing it cases just literally escalate all over the globe. So it's something to really keep our eye on as it gets the case for Bitcoin as a tool for protest, as well as to resolve emergencies. It just gets bigger and bigger.
Exactly, and another those are really good examples. You mentioned another one is Cyprus. I read recently there's been a big uptick in Bitcoin activity coming out of there.
Right.
And it was only
Turkey
less than
as well.
5 years ago. Yeah, Turkey as well. So I mean, basically, it's hard not to find a place where the involvement isn't increasing. And I think this goes back to this idea that it isn't a coincidence that Bitcoin emerged in the wake of the financial crisis.
Yeah.
And I think the more people learn about it, and the deeper you go, which perhaps we can get into a little bit more, and its relationship with gold perhaps in a second, but it was really almost designed like as a political statement in that sense, to enable the individual to take ownership or control over their own financial futures. I think that is basically hardwired into the DNA of Bitcoin's protocols, and so.
100%.
And it always reminds me of that quote from, I think, one of the Rothschilds that said, "Give me control of a nation's money, and I care not who makes the laws."
It's so true. It's so true.
In every situation where you see Bitcoin being deployed effectively, it all comes back to a case of monetary imbalance or inflation or capital controls or whatever else. So, for a pure demonstration of Bitcoin use, I think the examples that we've decided there are they're basically stacking up day by day, multiplying.
Yeah. So I just want us to turn our lens a little bit and just kind of look at sort of Bitcoin and the macro picture. So we've already referenced gold already, but just in terms of to just stimulate the conversation, we're seeing so much happen in the macro space. I mean, the world's literally on fire at the moment. We have the Federal Reserve, central banks all over the world expanding their balance sheets through quantitative easing and the printing of money. The money printers is going wherever that meme is. Even the US Federal Reserve has just announced they will be doubling the rate of inflation over the next few years. So add on top of that, COVID, currency devaluation, stimulus packages, and trade wars. Yeah, we're just in a time of monetary expansion, and historically, gold has been that go-to asset to hedge against monetary expansion by governments. In the recent years, Bitcoin has been baptized as Gold 2.0 and digital gold. So I just want to explore the kind of differences, the cross-section between gold and Bitcoin.
Well, that's a great question. And again, I mean, we could speak 24 hours on that topic alone.
Yeah.
I think that a good starting point really is to look at gold's history and why we're seeing certain dynamics play out right now in the markets with respect to gold, with respect to other capital markets, and with respect to Bitcoin now entering that picture as a real entity and competitor to the old established order of stocks and bonds. So I mean, if we think about what gives money value, I mean, as the global reserve currency, the dollar actually isn't tied to anything of value right now, no asset whatsoever.
Yeah.
But this, I think, for a lot of people who don't really know a lot about the history, a lot about monetary history, it's not actually that long ago since gold was pegged to gold. I mean, it was it was only struck off the gold standard.
1971, I think it was.
Exactly, 1971.
Yeah, Richard
precisely.
Nixon,
Yeah. So,
yeah.
And so, in those days, up until that point, 1 ounce of gold was redeemable basically at a fixed value of, I think it was $35.
Yeah.
And here you get into the debate of, Austrian economics versus Keynesianism and everything else. However, of course, to expand the monetary supply, some say it was just purely for political ends, for political goals, they had to remove it, as you say, in 1971. So, so that was the point at which that the US dollar, became essentially a floating currency, or like a fiat currency.
So to interrupt, did you know that the pound sterling was previously pegged to a pound of sterling, so you could actually exchange a pound sterling for a pound of sterling? I found that out yesterday, literally.
Yeah, because
I did not know that.
I studied the history of precious metals for years.
I found that out yesterday, that you could actually go and exchange a pound sterling note for a pound of sterling. Sorry, I just had to share that.
No, absolutely. I actually,
I did not know that.
That's actually given me a real boost that that we have that that common knowledge now, because I mean a lot of people don't know that. I guess some of the youngsters around today will probably think that it's named after a football player, but it really is. All the old coins used to be minted. They used to be sterling silver, which I think is 92.5% silver.
Yeah.
And even if you go around antique markets, or not even necessarily antiques, even things that are produced today, decorative items, things on the mantelpiece, or candlestick holders, a lot of them are sterling silver, so they actually have real value. And back in the day, when it was all about shillings and sixpence, that it was, all the coins were, as you say, sterling silver. And it was exactly the same in the US with gold up until 1971. And the point is really, since then, the dollar's value has declined immeasurably. I think over 95%, like 97% or more. And also in that same time, gold has gone from $35 an ounce to what it is today, between $1,800 and $1,900 an ounce. So, I mean, that's one of the reasons why gold obviously is seen against a hedge against inflation, and has largely been shunned by the financial mainstream, because it's seen as something that is essentially a lump of rock that's, I think, famously Warren Buffett said, it's dug out of the ground, out of a hole in the ground in one place in the world, refined, and then stuck in another hole in the ground in the form of a vault.
He's changed his tune on gold recently, though, hasn't he?
Yeah, well, he has. Yeah, he's been forced to.
Dropping his banking stocks.
Exactly. It doesn't, obviously doesn't provide any yield like bonds typically do. And as a result, it's the most negatively correlated asset class to the stock market. And so it's seen as an inflation hedge. But gold is not just that, because if you look at even the recent history of gold, for example, in the 1990s, we had inflation running very high at the end of the 80s and 90s. The gold price didn't actually increase that much; it stayed relatively flat. And likewise, more recently, I think between 2005 and 2011, the gold price went all the way from $400 an ounce, and rocketed up to $1,600-1,700, and that was during a period of relatively stable inflation. Oh, wow. So it isn't always a clean, a crystal clear or clean cut case. And that brings me on to the point that's probably more important, which is that it's also one of its primary qualities is really also a hedge against not just inflation but systemic risk. Mm-hmm. So that means real failures, like a failure of another financial intermediary or network, like a sovereign default, like we've seen in Lebanon recently. These things still happen, and they're probably going to increase in frequency. Like a real disaster scenario, like in the Weimar Republic or in Zimbabwe or Venezuela, when you have hyperinflation. Yeah. Those are the sorts of events where gold really, shoots up in value. It's because it's to protect people against like things, catastrophes. And lo and behold, what have we had in 2020? We've had a major catastrophe that apparently nobody saw coming. It came from left field. I'm not really sure why, because I think you've probably heard that, I think, under Bush and previous administrations here as well, they actually
Obama.
had a significant, Obama as well, exactly.
Yeah.
They had a significant amount of pandemic
Warning.
simulation
Yeah.
planning.
Yeah.
So I'm not really sure what happened to that. But the point is that these are the sorts of social and economic circumstances in which gold tends to perform very, very, very well.
Mm-hmm.
And so recently, what's happened is that we've seen Bitcoin enter the fray, and as I said before, it wasn't really taken seriously. But as its value increased, I think more and more people with interest to protect have seen that it might be something that has similar qualities to gold. I'm sure you would agree that we've all heard the arguments against Bitcoin that, oh well, it doesn't have any intrinsic value. It is basically not real because it just is an entry on a ledger.
Yes.
So what if it's distributed around millions of nodes around the world?
Mm-hmm.
There's still nothing tangible about it.
Mm-hmm.
Of course, those same people conveniently overlook the fact that central banks are now just engaging in massive ledger entries, to engage in massive liquidity pumping to keep their own economies afloat.
100%. Yeah.
But these are all arguments that we've heard. Doesn't have any no value. It's we know that it has very, very low transaction speed. So its use case as as a mass adoption in terms of everyday transactions hasn't really come to fruition because the TPS, the transactions per second, is simply too low. Which is why you had things like Bitcoin Cash and the Lightning Network to try and speed things up.
Yeah.
But I think that's all good and well making those criticisms, but on the other hand, people, again, I go back to the point that Nakamoto set up the Bitcoin in the wake of the financial crisis,
mm-hmm.
and not only that, he hardwired into the DNA of Bitcoin's blockchain are protocols that are closely linked and even mimic the supply fundamentals of gold.
Yeah.
So not only is there an inbuilt scarcity in Bitcoin.
Yeah.
So for example, it's 21 million, and we're pretty much in the clear that is the ceiling on total supply.
Yeah.
But it's also a question of it matching gold, so what they call the stock to flow ratio.
Okay.
Which is basically it's the new supply rate over total supply, basically.
Yeah.
And so I looked into the numbers on this, and currently I think it would take approximately 58 years to produce the total above stock of available gold if it were mined at current rates. And interestingly, Bitcoin's annual supply rate, which I think is about 1.7 now, or will be 1.7 after the next halving, it's actually also close to being 58 as well. So just to put that into perspective, that means that as gold's stock to flow ratio is higher than any other metal commodity in the world, it is now, Bitcoin is now on the edge of matching that sort of scarcity ratio. So all these design elements and protocols are actually built into the blockchain, which kind of give it that monetary properties that determine its scarcity and in a way its value. So yes, it does perform well as a store of value. It's not performing very well in terms of everyday transactions.
Yeah.
But in the same way, you'd be hard pressed to go and buy a Big Mac with a lump of gold.
Yeah, exactly.
that doesn't really work too well either. So exactly. So in that sense, the two have definitely a lot more similarities than differences.
Yeah. So I mean, we know gold is hard money, but Bitcoin is also hard money. But it also has improved characteristics such as portability, divisibility on top of it. Do you ever see a world where Bitcoin eats up some of gold's market share? I've heard the term of Bitcoin being called a gold killer. Just to look at some stats, actually, Bitcoin is roughly 2.5% of gold's market cap, and that's based on a 300 billion market cap. And I think the market cap for gold is currently around 12, 13 trillion.
Yeah.
So, I mean, even a move up to 10% of gold is fantastic for any Bitcoin holder. You see a world where Bitcoin eats up part of gold's market share.
That is an excellent question. And what I would say to that is I don't really see that as something that's going to happen in the distant future. I really see that's something that's happening right now.
Oh, right. Okay.
And there's a lot of data in the financial press and the investment press that's come out that's saying that there are large moves into Bitcoin, particularly looking at the high net worth segment. I mean, some of these people will be gold bugs simply because what you're looking at here is not necessarily the fact that they're moving in. They're necessarily moving from switching from Bitcoin to from gold to Bitcoin. This is the fact that the reason cited a lot of the times for investing in Bitcoin is that it obviously it clearly has significant appreciation value. Yep. But also, people are this narrative of digital gold is it's stuck. I always laugh about all those pictures that I see in the Financial Times or other news outlets where they always depict Bitcoin as a gold coin, which obviously it couldn't be further from that. Which I always find that quite ironic that they choose the one image that it couldn't be further from that, but that's always the image that you see in the mainstream press, in all press for that matter. But the evidence suggests that it's already happening. So, for example, a survey that was released by a big investment house, I think 2019, showed that over 67% of high net worth individuals see themselves moving into Bitcoin in the next 2 to 3 years. It doesn't necessarily state that will be at gold's expense necessarily.
Yeah.
But the moves are there. The surveys have said that over half of millennials now feel much more comfortable or at least more educated with cryptocurrencies in general and Bitcoin in particular, insofar as investment goes over
that's
gold.
Some huge data on stats. No, that's really, really
exactly
your trends to call out there.
Yeah, and so I think this is happening now. This is not good. It is at some point going to take over some of gold's market share. Nobody really has a crystal ball, so it's impossible to say to what degree that will take shape and how quickly it will occur. And right now, we're not comparing in any way, apples with apples in the sense that we're comparing an asset class that has a track record of over 4 millennia.
6,000 years versus 12 years.
Yeah, exactly. Or however many thousand years versus just a handful of years. But it is happening, and traditional multi-asset portfolios are rebalancing. I just read something the other day. I think it was in Bloomberg, where even a small rebalancing of 1%. So, for example, if you created a multi-asset portfolio in July of 2010, for example. Mm-hmm. Consisting of 49.5% equities, 49.5% bonds, and 1% Bitcoin, you would have realized an average annualized return of 104% in today's terms. Wow. So basically, that the translation there is just a tiny allocation of Bitcoin yields a huge amount and can already do basically has a disproportionate impact over the performance of a portfolio, and 10 years is not even necessarily a long-term view on this.
Not at all. Yeah.
So it's happening. It's happening.
Yeah. Okay. Right. So just changing our viewpoint for a second. Yeah. Let's talk about Bitcoin and regulation. So what? Yeah, I mean, this is a huge area, especially for your line of work as well. I mean, just in terms of to call out sort of recent what I've heard. So the chairman of the SEC, Jim Clayton, recently announced that Bitcoin would not be regulated as a security, but it would be regulated as a payment mechanism and store as value. So I don't know really what that means, but what do you see as the regulatory environment for Bitcoin at the moment? Because the world is trending towards digital. So what do you see as happening?
It's almost impossible to keep up with the regulation. I mean, it just is the volume of information, and we about this in the past in our previous conversations, that you could spend all day, every day, just on regulation alone, and you'd actually need a large team to cover all the bases.
Yeah.
And it just, but I think interestingly, it's just another classic, for me, another classic case of the governments and the regulatory authorities just playing catch up. Because they're always behind the curve when it comes to technological innovation. But the difference in the past with tech innovation, I think, versus what's happening now, is that Bitcoin and cryptocurrencies and indeed blockchain, it's not just about the technology. It's about the fact that it's like this very interesting ingredients that's kind of produced a novel product. On top of that, it also represents an existential threat to governments and to regulatory bodies, because they ultimately need to be in control of the monetary supply. So all this the constant flip-flopping and vacillating over what to do over regulation, I think really is indicative of the fact that they realize that, yes, okay, we've slept on this actually, and the genie's out of the bottle. And we're really not sure what to make of this thing. Is it a commodity? Is it gold? Is it a currency? Is it a security? It's quite difficult for people to really wrap their heads around this. And obviously the ICO frenzy of a few years back did a lot to sort of confound things even further, because people link that to the sort of the Wall Street IPO pump and dump schemes and everything else.
100%. Yeah.
So I think people really saw it as a security, but of course we now know it's not a security. It's not really any of those things. It doesn't fit neatly into any of those categories. But of course, the regulatory bodies can only try and do that. They have to try and pigeonhole it in a sense, because to erect a whole new series of regulations around this one thing, which is still unproven in their case, is not a path that they want to go down, I think, at this stage. But to answer your question directly, I mean that I read that also, that I think it's the Senate, I think 2 bills have been released. I've got some notes here. Was it the Securities Clarity Act or something like that?
Right.
And so they're basically saying that, yes, okay, it's not a security. So what we're going to do now is we're going to regulate Bitcoin. The SEC will basically drop it, and it's going to go over to the commodities regulation guys, which is the CFTC. And I think so. The goal for them there is just to bring about more oversight. They say, of trading venues and Bitcoin, Ether, commodities, and everything else, so they can get like more oversight and track what's going on in the space. But really, what it also represents is that they're trying to bring about a certain degree of regulatory harmonization over all these disparate things that they can't seem to quite grasp.
Nailed down.
So it nailed down exactly. So it is also an expression of an attempt to be able to do that. And we've seen the last few months have been replete with examples of things that they've had to sort of step in at the last minute and do take drastic and draconian action, almost to make an example of certain exchanges, because again it just shows that they're very much behind the curve. But the rate of the space is really key. I mean, it is evolving at a incredible rate, and I think that it's like a 5-headed monster. Once you cut one head off, you still got 4, but then the other one might grow back, and it might grow some more still.
Yeah, it is crazy.
So very interesting. Yeah. I wanted to actually ask you a question about what you thought of the Arthur Hayes and BitMEX fiasco of like a month ago. Because I thought that was a good example of an exchange maybe gone awry, and the regulatory authority stepping in to try and to exercise some authority and to reestablish control over something they've clearly already lost control of.
Yeah, I'll be honest. I don't know the facts. I mean, I know high level what's going on in the case, and so my understanding is BitMEX set up in another jurisdiction to obviously circumvent the SEC and sort of the reach of all the regulatory bodies within the US. So my
Yeah.
understanding, they're all above board, and so it seems to me they're looking for a scapegoat. I think BitMEX has been doing quite well from a derivatives perspective, and
Yeah.
I just think it's really a bit of bullying from the regulatory bodies. But to be quite honest, I don't know the details of the case in terms of what BitMEX has been doing, what's legal, what's not legal. But it does seem like there's a number of organizations doing exactly what BitMEX has been doing. I think Ripple, they're trying to leave the US at the moment as well. They've apparently leaving their office in New York and looking for somewhere to set up either in the UK or Singapore. So there's no clarity. There's no clarity.
Yeah.
So as long as there's no clarity, then there is obviously loopholes and there's a lot of grey areas, and then regulatory bodies can catch or hold to account whoever they like.
Yeah, pretty much. No, I think that's it. I do think that there's, I mean, you said before that there's no clarity, and as far as I understand, and again, I don't know the exact extent or nature of the AML and KYC violations that they committed.
Yeah.
But what it really interests me about that case, they never actually took possession of US dollars on the exchange.
That's my
So in other
understanding.
words, yeah, exactly. So in other words, they actually created an algorithmic or synthetic US dollar, and so you would basically deposit Bitcoin and withdraw Bitcoin without a single fiat dollar ever being touched or deposited or whatever else.
Okay, yeah, they don't like clever people like that, do they?
Well, exactly. Yeah. And what's interesting about that is that, and this goes back to the question that you asked previously about money and what really is money and gold, etc. Is that, as far as I'm aware, this is like the first time that the federal government in the US has gone after an exchange, or even a crypto derivatives exchange in this case, that actually never has taken custody over the US dollar. So that, for me, that sets a very important precedent.
100%, yeah, big time.
In terms of the regulations of this market, and not only that, it's also in a way a tacit admission on the part of the US regulatory authorities that Bitcoin is a form of money, because otherwise, what are they railing against here exactly? So it's a very interesting case study.
Yeah, I agree. It's totally interesting, and I guess for regulatory bodies and society as a whole, we are treading waters that we haven't trodden before. Bitcoin is, as I think I've said this metaphor to you before, is like a duck-billed platypus, which is one of these freak creatures which has features from other animals. It's got a bill of a duck, it's got the skin of the otter, it's got the web feet of, I don't know, some other animal. So like Bitcoin is, in some respects, is a security, in some respects is a property, some respects is, it's so many different things. And so obviously the regulatory bodies just don't know how to deal with it. But in saying that, in the last 6 months, what we have seen organizations such as Michael Saylor's MicroStrategy purchase $500 million worth of Bitcoin, and that's not even including his own personal stature of 100 million worth of Bitcoin, which is apparently gone up to $1 billion now, given the price movement. But we're also seeing Jack Dorsey's Square, Fidelity, Kraken, I think, is being given sort of a chartered license to open a bank. So I see a lot of these, especially MicroStrategy's transaction is huge in terms of building the credibility and a protective moat around Bitcoin. The more sort of investment, the more sort of public companies that purchase it, I think it kind of fends off the regulators. What's your thoughts on that?
Yeah, basically, I completely agree. I mean, it is almost a case now of, I think the doom and gloom and the naysayers are, gradually, falling on hard times and being quiet.
Mr. Radini, where are you?
Exactly. Yeah. I mean, I like to sort of single him out as an example, but at least he has had the, he's manned up and basically said, yeah, well, there might be something that I've missed. So, I think that's an important thing to be able to do. And at this stage, I think what choice do you really have? It's a question of old world thinking in a new paradigm. I think that he and many others are guilty of. But I think you're completely correct. I mean, it is a case of, if you can't beat them, join them. And a lot of these companies, it's no longer just a bunch of people sitting in their bedroom, making transactions or whatever else. The big corporates are getting involved, and they're
are they taking notice? Are they sitting up, the big corporates, from a McKayResearch perspective? Are you seeing that?
Well,
in the data?
I think it's clear that looking at various sites like the Bitcoin treasuries, for example, they do a great job in compiling a lot of data about how much these companies hold. Is that they're basically putting their money where their mouth is.
Right.
Buying that volume of Bitcoin, it speaks to the fact that I think we were discussing before that Bitcoin is fastly approaching its all-time highs. And though I know that you're not supposed to say these 3 words or 4 words even. This time it's different. Because there was always the famous last words of before a pre-market crash. But this time it is different this time because of the activity that is pouring into these markets. And I wrote about this in the first piece that I ever did on the actual institutional interest in the markets, like just over a year ago. And in those days, it was it was more or less towards the beginning of trying to get an ETF approved. It was I think the Winklevoss brothers and everything else. And obviously they failed. Not that they've given up, but since then there's been many investment houses that have tried, and there's been successive attempts that have all failed. But I think everybody who's following the space knows that it's a question of when, not if. And it will happen. And once the ETF gets approved, then that is almost like a gateway and will catalyze institutional investment into the marketplace. Because once you can start saying this is a certified and regulated financial product that is supposed to have underlying custody of the asset, i.e. Bitcoin, in the same way that say a lot of the GLD or SLV has underlying or supposed to have at least underlying custody to the precious metal, then that is going to set off a wave of investment activities from investment houses, from hedge funds, from pension providers, just across the board. And we can see every day all the infrastructure and all the announcements are building up around this, almost leading up to this big announcement. So it's almost like a steady crescendo or a drum roll into that ETF announcement. You mentioned a few good examples, like Kraken, for example, getting a banking license. That's a huge development.
Big.
And there have been many others. So.
So I mean, if you buy a share of a public company which has a significant amount of Bitcoin in its treasury, is that technically an ETF? A makeshift ETF.
Well, I mean,
you got some exposure there, wouldn't you? Yeah.
Yes, exactly. Yeah. So you could say that might be a way that some people might be able to play that as a proxy.
Yeah.
I still think though that's going to be insignificant to people wanting to actually invest in
100%
in Bitcoin vehicles. But I think you raise a really important point there, and that is this issue around custody. Because going back to what we were saying about gold, there's a saying in the gold market that if you don't hold it, you don't own it. That if you say you buy a few shares of GLD or SLV, you're supposed to have legal title to the underlying asset. Well, that's what you think that you have, but in fact, you don't necessarily, because it's just it's unallocated, put it that way. So it just all goes into a pot, and it's divided up by by the shares. So their total holdings of metal are divided by the number of shares that they have that they issue against those holdings. So it's a little bit like your bank branch. If everybody turned up and tried to withdraw all their money at the same time, of course we all know what would happen. Yeah. They'd be good for about 10% of it, whatever the fractional reserve or the capital requirements are, and beyond that, the doors would close, and that would be it. And of course, the whole system is built in such a way that they depend and rely on the fact that that won't happen. And so that is the same thing with in a way with commodity ETFs. That if everybody tried to redeem and take delivery on their gold at the same time, everybody's rushing to the exits at the same time. Of course, the exit stays the same size, so not everybody's going to be able to get out.
I like that one.
And it's the same thing with. I think people are clocking onto that fact now with Bitcoin, that there's been a number of announcements made over the past few weeks. I mean, the biggest one, I think you'd agree, is probably PayPal.
Oh, we forgot about that one. Yeah, cool. So that's a huge one to call out.
I think that a lot of people were really happy about that, and I think that people were getting excited about it, saying, "Oh, it's going to make internet money even easier," and now I can have my PayPal account. And I can actually send and take ownership of Bitcoin. But I think those people who know a little bit how these systems work and actually how these custodial relationships work know full well that it's not all that it's made out to be. And from my perspective, for many years I followed these the debates in the gold market about what actually constitutes a gold investment. Like, how can you ensure that you're able to benefit from for holding the asset in the first place and all the properties that it offers, like we discussed before, inflation hedge, systemic risk. Well, it turns out that there are actually not that many options. It's either you hold it yourself in your hand and store it somewhere in your sock drawer or in a vault, or you have to go through a series of do a bit of research about secure gold vaulting solutions that offer actually allocated accounts where you actually have legal title to the gold. But even then, it's still not in your hands. There's still maybe an element of systemic risk where you might be redeemable in currency and not in gold. And I think people will start to realize that with Bitcoin, it's the same thing. If it's not your keys, then it's not your Bitcoin. So with PayPal, look and feel like you have Bitcoin, like with Revolut and other companies like that. The reality is, if you don't have your private keys, then it's not actually yours.
Not your Bitcoin.
And there are any number of counterparty failures that could happen in between.
Yes,
that could result in the loss of your asset. So I think that's probably important to bear in mind, and that goes back again. That's another commonality in a way between Bitcoin and gold, for example.